This lesson is going to take you through why and how journals are used in accounting. Remember that the accounting process is important in order to provide useful information to the users of our accounting information. This would be in the form of financial statements for stakeholders. Stakeholders refers to anyone who has an interest in the success of this business. So it could be owners, the bank manager, creditors, etc. Financial statements are where you take all your accounting information and it's simply a summary of everything that has happened for a particular period or at a particular point in time to show the stakeholders how the business is doing. In order to be able to prepare that information, remember that we keep source documents as evidence of each and every transaction so that we don't forget about anything that might have happened. But how do we get from these source documents to the financial statements? Obviously, we need to have some kind of process to sort all of these source documents and to create the information that we need. Yes, we've used the accounting equation to analyze transactions and understand what is going on. And although it is possible to add all your assets, equities, and liabilities, it's a little bit cumbersome to work out exactly which assets have how much in them, etc. T accounts are a little bit better at summarizing the information to create what we need. However, if you're a large business or even just a small business that has a number of transactions every single day, it will be a little bit too cumbersome to just use T accounts. As a result, we create journals. Journals are going to solve our problem of where we've got too many transactions to use only the T accounts to process the information. The journals are going to act as summaries of all the similar transactions. In other words, if we take all the source documents relating to our cash receipts and put them in a pile, we can then summarize all of those documents in something called a cash receipts journal. In the same way, we can take all the source documents that relate to the payments made and put them into something called a cash payments journal. So the cash receipts journal will be drawn up using our proof of EFT receipts where customers might have done internet payments into our account, cash invoices from cash sales or a cash register roll if your business is big enough to have a till, and maybe duplicate receipts for monies paid directly to the business. The cash payments journal will be made up of records of any EFT payments that have been made, and if you are still very old-fashioned and using checks, then yes, you would use your check counterfoils. In reality, you might also pick things up from bank statements, for example, if there were bank charges and things that you had to pay. So when we are creating our journals, remember that what we're trying to do is simply summarize all the transactions. So all you need to do is take the information from those source documents and tabulate it in some way that makes it easy to access the information and work out so what was the total amount received or the total amount paid and for all the different things. You're going to use separate columns for the different pieces of information. For example, it's important to know how much the transaction was for, obviously. What was the other account involved? So you'd put the amount there as well. And it's also useful to know where did the information come from? What was the source document? When did it happen? Who was the transaction with? And so all of these would make up the different headings in your table. At the end of the period, usually a month, you can then total your money columns to work out what was the total amount received and then what was it received for, the total amount from services rendered or the total amount from rent income, etc. So this is what a cash receipts journal might look like. You can see over here you have a column to show the document that you got the information from. If you're using a variety of documents, which is often the case in the cash receipts journal, you would then need to specify what the document is, as well as a number. Usually we will number our source documents so that if we want to refer back to them to check for anything, it's very easy to do so. And obviously we will put it in date order usually. So there's a column for the day in which we're going to enter the transaction. This details column over here is a space for us to show who did we undertake this transaction with, who is the other party involved. In other words, for a cash receipts journal, who gave us this money. Notice over here that we also create a summary name for the cash receipts journal, CRJ, and then the X will be the number, usually the number of the month that you're dealing with. But all that is it's a little summary of the name of the cash receipts journal so that we can use it as what is known as a folio reference later on to track where the information went. So just like showing where it came from, we've got our document information here. This is telling us where we are right now, and then when we send it somewhere else, we'll use this as the reference. Now you can see that we've got a number of money columns here. Bank is the most important one for a cash receipts journal because obviously it will always be involved, and that is why we are creating a cash receipts journal. Remember, we are trying to summarize all the transactions where money was received. So every single transaction, the money must end up in the bank column. However, that is referring to the actual bank account. And in practice, you might first receive the money as hard cash that goes into your till before you deposit it. That's where this analysis of receipts column comes in. We are only going to use it in the cash receipts journal. There's no other journal where we need to use it. And in fact, you might decide you want to actually call it cash instead of analysis of receipts. That might be easier for you to understand what on earth you're actually doing with it. So this column, analysis of receipts, is to show when we receive some cash and we haven't yet deposited it in the bank account, we will enter it into the analysis of receipts column. You might have a couple of entries on one particular day. Maybe some customers come in and buy for cash. You use cash invoices or the cash register roll. You will then enter that cash over here in analysis of receipts. At the same time, you might have a debtor, a customer who walks in who owes you money, or maybe your tenant who wants to pay you rent, and they also give you cash. Or maybe even pay by credit card. We treat that as cash because in fact when they're paying by credit card we get the money immediately from the bank. So all of these entries will go straight into the analysis of receipts column, and then at the end of the day, or maybe even at the end of the week if you're a very small business and can't get to the bank every single day, when you go to the bank you will then total up the analysis of receipts column for that day or for those few days, and then the total amount will go into the bank column. So this bank column over here is actually representing everything that happens with the bank account, and analysis of receipts is tracking your hard cash in your business. If you have an EFT where somebody pays you directly into your bank account and you never actually see the hard cash, you won't even use this column. You will put the amount straight into bank. But these two columns work hand in hand because those are together representing the money that you've received. So it will always need to go here. In addition, you will always put it somewhere else in one of the other columns. In the cash receipts journal, you can see here you've got services rendered. That would be, for example, if you are a hairdresser, the money that you receive for doing people's hair. Later on, you will also learn about cash sales, where you're selling items if you're a trading business, and so you could have a column for sales and for any other columns, items that you might be receiving money for. So this is to summarize transactions where you've got a lot of very similar transactions. Obviously, if you're doing people's hair, you would hope that you would have a lot of entries in your services rendered column, and so that's why we've created a column for it. Your sundry accounts over here is shown for any other accounts where you didn't create a column. If you wanted to, you could create as many columns as you liked. If you're working on paper, you might just run out of space. If you're working in a spreadsheet such as Excel, you can make as many columns as you like, and you certainly wouldn't even have any sundry accounts because you don't need it. So it really depends on how the business decides to set their journals up. If you don't have an unlimited number of columns, then you will need to have a space over here, and then you would put your amount and you'd put the details or the heading of the account that you would have created if you had unlimited columns will be over here. So this details is referring to the name of the other account involved. Over here, the sundry just means other bits and pieces. There's no general ledger or T account called sundry accounts necessarily. So over here, it's just saying there are other accounts, other bits and pieces, and we're just going to list them over here. This folio column we're going to use later on when you end up posting to the general ledger, which is basically a detailed list of all your T accounts, and it's to track. So just like I said to you, the document is showing where the information comes from. This folio reference will show you where the information is going to go to once you've processed it in this journal. The cash payments journal, you can see, has got a very similar layout. You've still got your column for document, day, your details, or you might call it name of payee. It's the person who you are paying. Remember, the other party involved to the transaction. For the cash payments journal, generally you'll make your payments directly out of your bank account, and therefore you don't need an analysis column or a cash column. So we'll just work straight out of bank because your payments either would be made as an EFT out of the bank account, or maybe if you were still very old-fashioned and using checks, you would use the check, which again would come straight out of your bank account. Over here, we can see a little bit more clearly how we have a variety of other accounts involved. In this case, we've got material costs, which would be the shampoos and the gels and everything else that you use on people's hair, and then maybe the stationery, because maybe you work through a lot of stationery if you still do manual bookings and so on. And then if you've got expenses that you haven't created columns for, obviously you'll use it in your sundry accounts over here. At the end of the month, for both the cash receipts and payments journals, you will total all of these columns so that you can then send just this amount to the bank account. You saw the T accounts previously, and when you were doing the T accounts, you had to enter every single entry with bank in. Now you don't need to do that. You just enter this total that you work out, because that will represent all the amounts that you have paid or received for the month. Similarly, you can over here take the total of material costs and the total of stationery and post it to those accounts to simplify the process. And that's hopefully how you can see that our journals are summaries of the actual transactions for the month. So let's have a quick look at 8.1 example. The information tells us Google for all the receipts. Now remember, the receipts would just be the pile of all of these documents. Sometimes you will be given actual documents to use. Sometimes they will just list the information for you, as has been done over here. But it's a good idea to try and visualize the document for yourself as well. In this case, Gugu Nyatsumba contributed an additional 50,000 Rand capital, receipt 51 issued. So she handed in either hard cash or a check to the business directly, or maybe used her credit card if the business has got a credit card machine. Gugu might have used her personal credit card. But in any case, the business has actually received the cash. And so therefore, that 50,000 is being shown in the analysis of receipts or cash column because the business is holding it. The document is receipt number 51. The day was the 4th. Details is the name of the owner in this case. And there you can see I've put the amount that I have received. But you must always use two accounts. Because I'm not always going to receive a lot of capital every single month, we would imagine, I'm not necessarily going to have an account for capital as a column, and therefore I'm going to show it here as sundry accounts. But you can just look through your columns and see, oh, there's no capital, therefore I'm going to pop it over here. I put the amount in the amount column and I write capital because that is the name of the other account involved. The next transaction, which also happened on the 4th, was the cash register roll showed 13,000 Rand for beauty services offered. So my document is CRR. If they had given me a number for my cash register roll, I would include the number there. The details in this case, you can just put cash because you don't know all the different customers. So it's easier just to say cash. The amount that you received was obviously 13,000, but remember the amount must go in two places because there are always two accounts involved. So one is going to be in my cash or analysis of receipts column because I received the hard cash, and the other one will be in current income because it was for my beauty services offered. That is what my business does. That's my main form of income. Notice I haven't yet shown anything in bank, but now at the end of the day, it tells me that my cash received is deposited. Now, they won't always tell that. If they don't give you information about when deposits are made, assume that deposits are made every single day because that is the best practice. What you will do then is you will take this 50,000 and the 13,000, you will add them together and you will put in a line over here. Unfortunately, it's not very clear, but where I'm showing you with this arrow, you would put a little line to show that you are totaling those two amounts together and taking it out of cash. So now there's no more cash left in the till, and that 63,000 goes into the bank account. So over here you can see I've highlighted it in yellow to indicate that that is the total amount that goes into bank. When I receive my bank statement at the end of the month, I'll easily be able to see that was the amount of the deposit and tick it off when I reconcile it. On the 15th, we have an entry showing the cash register roll showed 22,000 for beauty services, and this was deposited. So in this case, it's very simple. It looks exactly the same as the CRR entry on the 4th, but this time it's on the 15th. We put our 22,000 in analysis, and we put it in current income. Those are my two entries for my double entry system. And then at the end of the day, I will underline the 22,000 and pop it into bank because I would have made that deposit. At the end of the month, I'm going to total all of these accounts. Because I've always put it into analysis and or bank, and then somewhere else, current income or capital in these cases, if you take your bank column and compare it to your others, you can see that my current income plus my sundries must equal my bank account. Notice I don't have anything in the analysis of receipts because I did daily totals when I transferred it into bank. So there is no cash, and that's why this column here is empty. If we have a look at the payments, on the 5th, additional equipment purchased from Parker Supplies, 18,000. Check 439 issued. This is obviously a very old-fashioned business. So we will enter here the check number that was used. You could put CC next to it if you wanted to. The day is the 5th. Parker Supplies is the people that you paid the money to. And then the amount needs to obviously go into bank because you're doing the cash payments journal. Bank will always be involved. And then you say, well, what did I spend the money on? It's told me over here, equipment. And so therefore I will go to my equipment column and put 18,000. If I didn't have an equipment column, then I would have entered it in sundry accounts. On the 6th, paid rent to Pulteney Letting by EFT, 8,500. My source document in this case is EFT. I could have decided to number my EFTs, and then you'd put the number here next to EFT. The day is the 6th. Name of payee, Pulteney Letting. Do you see? You just read it off the information that is given here. You pop in who is the other party involved, Pulteney Letting. The amount is 8,500, which must always go in bank because this is a payment. And then you ask yourself, what was it for? Why did you pay them? You paid them for rent. So that must be rent expense. You have a look at your columns. You don't have a column for rent expense, and therefore you will pop it into sundries. You will write the amount of 8,500, and you will need to write the name of the account that you are using, which must be rent expense. Do add expense because you need to differentiate it from, for example, if you have a tenant who is renting an office from you, then you might have rent income. So it is important to specify if it's rent expense or rent income. On the 12th, paid for beauty products, which we are going to treat as material costs, by check made out to SADC stockists, 7,500. So over here you put your source document number. Now notice they haven't told me what the check number was, but you use your common sense. The previous check was 439, you can see that over here, and so therefore the next check must be 440, you just add 1. The day is the 12th, SADC stockists, 7,500 in bank, and material costs. Material costs always relates to stores and things that you use up in generating your income that you need. On the 21st, you paid them via EFT for beauty products. So you can see my source document is now an EFT. If I was using a numbering system, I would just use the next number after the one on the 6th. I put my day, the 21st, the name of the other party involved, SADC stockists. 7,600 will need to go into bank because that is the total amount that I spent. Even though I've bought two things, I bought beauty products for 5,600 and I've bought equipment for 2,000. I'm not going to make two separate EFTs. I'm only going to do one payment. Otherwise, I'm just being silly. So usually you would just do one payment, and so therefore you show the single 7,600. Out of interest, if for some reason you had done it as two separate payments, you would then do it on two separate lines as two separate entries. But in this case, you're doing it as one entry because it's one transaction that's happened. You put the total in the bank column. Material costs will then be the amount of 5,600. Equipment will be the amount of 2,000. So you just split it up into the different accounts that you need to use. Now you're ready to go and do your own exercises. Go and try exercise 8.2, formative assessment 8.3, and summative assessment